All righty, traders, let's take a look at our trade and market review for Friday, October 13th. So Friday the 13th, 2023, and it absolutely was a Friday the 13th day. Jason came out, slashed the markets up pretty good. Let's take a look at what happened in the market. Let's take a look at SPY first. And I like looking at the weekly and the daily together. I think if you're just looking at daily charts, you don't get the full picture, because if you're looking at this daily chart, you've seen MACD just reversing higher, looking pretty good all the way up until Friday. The 13th here, MACD was moving up, and then you had RSI also moving up, breaking above the 50. Things looked really, really good. If you're just looking at the daily chart, you got people on YouTube, oh, massive buy potential. I saw somebody, time to get greedy. This is going to go up 3x. I'm bullish on the market. That's all great to say, but look at it in context here. I'm not saying that we may not go higher, but what I'm saying is you got to look at multiple time frames on this. So if you're taking a look at the daily here, yeah, you broke above the 21, hit the 50, rejected on Thursday, came back down closer to 21. But if you look at the weekly chart, which is in control still, okay, this is a series of, lower high, lower low, lower low, maybe a lower high. Lower high, lower low, lower high, lower low, maybe another lower high. Can't even fill this gap on here. Now, we did get a 1 day or 1 week curl up here. You are still in this downtrend on SPY. Until you break the downtrend, it's just a rally in a downtrend. It's just a pullback in a downtrend, if you will. Just like you have pullbacks in uptrends. Okay, they don't change the trend. They just give you an opportunity to buy or get out. And I think this bounce right now is giving you an opportunity to get short if you believe this downtrend is going to remain. Okay, until we make a new higher high on the weekly, which means you're going to have to get all the way up here to 453, so 45.30 on SPX. If you can't break that number, in fact, let's just to make it easier on SPX, if we were just looking at SPX, where do we have to get to here? You really got to break this 45.11, more than anything. So 45.11 is really the area that we're going to be looking at first. And then you may even have to go to 45.41. So I think until we see these areas broken, we remain in a downtrend on here, and it's pretty evident that this remains a downtrend. Nothing changes my mind on the fact that we are in an overall downtrend, which could be a pullback in a larger uptrend. All this stuff is crazy, but who knows where we are. But right now, we remain in this downtrend, this downtrending channel, and I think you have to respect it until something changes this particular setup. And nothing's changing it right now. So we'll get back to SPY here. I'm not going to tell you that I think we're going up, back up the truck. Right now, that doesn't look too hot. And you get a turnover today on the MACD. So daily MACD is dropping. Weekly might be starting to curl, but it's only 1 week. We got to see another week of sideways to upwards movement and RSI digging back up. Otherwise, RSI remains in a downtrend. I'm going to do a video maybe this weekend on reversals and what I would see to pull in a reversal. But what I want to see on a reversal is if you're in a downtrend like we were here, and if I'm looking at MACD and RSI, I'm looking to see, okay, as the signal line and the MACD get farther apart, strong momentum to the downside. When they start to squeeze together here, which is what the histogram shows pretty easily, they start to get together here, and now you are seeing momentum running out of the down move. Well, momentum started running out of this down move right around here on this little up day. in it. But we still headed down. Yeah, it didn't mean all is clear. We were still heading down, but the divergence here was MACD was rising while the market was falling. That's signal number one. Then we take a look at the RSI. On this lower low here, was that a lower low, here or so? Were these lower lows from this previous low? They are pretty close to the same lows. Not a huge divergence here in it, but overall, you saw us getting into oversold territory, not a big divergence in RSI. So RSI wasn't as on board as MACD was telling you. And we got a little bit of a reversal, but not a big, strong reversal. But that's what I'm looking for. Same thing here. If you're falling lower, is MACD falling? Yeah, so MACD has been falling. Only when it reversed was that something, but it, to consider getting into, but MACD was falling along with the market. No need to get out. RSI falling around with the market was not an indicator. But if we look back here at SPY, and maybe let's just pick this time frame back here, the markets were heading up. But what was RSI starting to do in this period? Well, RSI during this time period in here was actually heading lower. MACD was heading lower. Okay. So MACD was heading lower, RSI was heading lower, markets were heading higher. Good indicator that this was going to reverse at some point in here. Now you got to be able to decide what is that point. But the markets were telling you here, well, you're running out of steam. RSI is not seeing new highs while the market's seeing new highs. Absolute divergence in both MACD and RSI. Now you got to look for potentially a break of this trend, which is what happened here, which also coincided with RSI beginning to fall, breaking the 50, MACD falling as well. Yeah, so MACD crossover starting to fall and starting to accelerate to the downside. So this was your trigger in here to get short, and then we watch it fall until you stop out at whatever your particular stops may be. For me, I'm watching MACD starting to reverse, and I'm thinking, okay, now I'm getting out. But if you think this break of the trend line was your opportunity to get short, okay, then you would also potentially use the same type of a setup here to get out or exit the trade. So I might have gotten in here. We started to reverse MACD, everything moving higher. I probably would have gotten out, but for sure, the actual break of the trend line was either in here or in here. So I'm not saying those are exact. You may have stop losses. You may have other ways to trade. I'm just giving you some idea of gauging what direction the market's going. Well, right now, on this move up, MACD starting to run out of steam. The divergence isn't there yet on this move, okay? But this particular downtrend move, you are seeing RSI moving higher during the latter pieces of this downtrend move. So while we're here at these lows, MACD, or RSI, I should say, and MACD are both moving higher on these lows of the day, which means to me, these new lows aren't seeing new lows in MACD or RSI. Change is coming. And again, following some sort of a trend line break or something along those lines. There's a lot of ways to pick your move, but there was the move here to potentially get long. However, would I have gotten long here? Maybe for a short date type, swing type of a trade, maybe, but in the weekly, we're in a downtrend. So while looking at the daily chart is one thing, I think if you miss the weekly chart, you're missing the overall larger picture. So any bounce here was within an overall downtrend, with MACD was dropping, RSI has been dropping on the weekly. You are fighting the current. Okay, you're going down the rapids here, and we're just going down the rapids. Okay, now you turn your kayak around and you're trying to swim back upstream. You're trying to paddle upstream there extremely difficult to do. Eventually, the current is stronger than you are, and the current will take you back down lower. So until this current changes direction, okay, it's in charge. All right, so that's enough of that. We'll keep moving on. Down day on the Qs as well. So Qs dropped significantly. Tech had a pretty awful day, down over almost 1.3% on the session. The Qs falling lower. MACD, RSI, both tipping over. Neither one got to really an oversold-ish, especially on RSI, not getting to oversold. However, we'll keep an eye on those. But on the weekly chart, you're still in this downturn. We did come up. We touched the top of the trend and totally failed at that on the week. So we're moving back lower. But you've got RSI and MACD both falling. Now, MACD starting to curl and RSI a little bit here. So we'll see what happens. Overall structure is not too bad. This is more of a little pennant flag here that I think if we can break through this top of this downtrend, you could get a pretty nice run on tech stock. So a little bit of everything. I think you just got to be cautious. Just can't be crazy and go all in on any positions. I think keep them small. And I think selling premium here is the smart move because you can be a little wrong with out of the money puts or calls. You can be a little wrong and still win. If you're right, you win. If the market doesn't move, you win. If you're a little wrong, you still win, which is why I like selling premium, not buying. All right. IWM just having a horrific several weeks, couple months in here. This thing's just hitting closer to new lows. Now, you are getting close to new lows, and RSI is not quite at those same lows that we were back in here. Okay, so RSI not at the new lows, and MACD not quite at new lows. It had actually started reversing here when we pulled over. Does that mean get long, reversals coming? Well, not yet, because you're in a pretty significant downtrend here, but you might be able to swing trade or move this if we get any kind of an upwards move next week. We'll see what happens in the week, next week. Lots of stuff on the plate to see where we end up. Put call ratio, still inside the range of 0.7 to 1 here. Nothing unusual, nothing to take a look at. I do actually look at the 10 moving average by itself, kind of in a vacuum. So let's take a look at this using the daily chart, but using the 10 moving average. Here you go, getting overbought and pulling back underneath, but starting to curl. Let's keep an eye on that. But this signaled an opportunity here, for some shortish action with puts getting overdone here. Or sorry, a little bullish action. When you get to the bottom here, where calls are more dominant and overdone, and you start to reverse, well, then you see the market start to sell off a bit. So when we get to these overbought levels here, those are typically fairly bullish. So we'll keep an eye on it. Not saying we're moving one way or the other. VIX, though, big move on the day for VIX. Closed up, was at one point almost to 21, over 20, and then closed at 1932 on the session. A 16% move on VIX. This is really the story of Friday. The markets didn't move much. Okay, when you're looking at SPY moving 0.5%, okay, 0.5%, that was it. SPX was down 22 points. 22 points is nothing. 0.5% is almost a nothing move. However, VIX, huge move. Okay, big move on VIX. 16% jump in VIX. Volatility is on the march right now, moving back higher. It was creeping higher, had a little bit of a pullback here, and now may resume that. If we're looking at the weekly as well, weekly has been on the move. RSI moving higher, MACD moving higher. VIX has been on the move since about beginning of July here. So while there's a lot of sideways daily action, the weekly action has really started to pick up, and it really picked up when we crossed the 50 here on the week of the 18th. So we're looking around 918. So this week in here, this is where, and again, we crossed the 50 here on the 20th. This is where VIX has really moved up above 15 and is now sitting at 19, and it's hit 20, almost 21 the last couple of days. It's all about volatility right now. Everything you're seeing in your account is really getting hammered with volatility. There are some things moving, oil, gold, big moves, but even bigger is the volatility move. For a premium seller, this is awesome stuff. If you're selling new premium, if you're already in some premium that you sold at a lower volatility, well, it might be hurting a little bit, and it's maybe exaggerating some moves that you're in, but it's a good atmosphere to start to be in if you're selling puts or even selling calls. Just selling premium as a whole, I think it's pretty nice to take a look at what you got. So there's where we are on that. If we look at the US dollar on the session, it did move higher on the day. So dollar moved up. So that's breaking out of this range that it was in this previous resistance level. I'm going to move this thing out even further for us so we can see. But it came down. We didn't quite bang on it evenly, but you bounced right off of this previous resistance level, which now has flipped to support. So you got a resistance support flip in this zone here, and you're bouncing off of that. Dollar briefly may have broken below this uptrend for a day or two, back above it, and the trend is back on. So dollar continues to rise, not great for Forex stocks. TLT on the day had a nice little move up after a massive move down, after getting just absolutely crushed on Thursday. Overall, not bad action. You're near the bottom. RSI is moving from oversold higher. So is MACD. But look at the other time frame. So let's look at the weekly time frame. What's the weekly telling us? Well, the weekly is telling us that we continue to be in a downtrend, and I'm using two different downtrend lines here. I don't care which one you want to take a look at. One's longer term in the blue, one's a little shorter term in the pink. You are oversold, totally understand. MACD has been dropping until this week. We haven't started to see a curl in the MACD at all yet. We would need one more week to start moving higher. If that's the case, we'll start to consider it. I mean, this is a pretty oversold territory. But look back here. We were even more oversold back here, rallied higher, and then after some sideways action, we tailed off again. If you believe some of the things that you're hearing on the rates of the 10-year going to 5, 6, 7 or so on the 10-year or more, as you start to hear some things, that's not going to bode well for bonds. Bonds are going to continue to fall if rates are rising. If we're looking at the rates here, we're holding this 21 EMA on the daily, the weekly, very solid up move. Maybe a little weakness here. Let's see what happens. We're not getting the benefit, though, of this rate drop that we've had last week. And if they curl and start to move higher, we'll see what happens. Now, MACD and RSI show us momentum is dropping. A lot of mixed signals out there. It doesn't mean get long TLT. However, we are playing it a little differently than buying here because, again, if I'm selling premium, I can be right on direction. I can, if I'm moving in the right direction, I can be right if direction really doesn't change and we just flop around in here, which is what happened the last time we got oversold, ran up. We just consolidated sideways before we tipped over. That's fine. Sideways is great for premium sellers. And I can be slightly wrong and have it actually come back down a bit if I'm selling some premium here. And then if it falls far enough, maybe you get assigned, and that's how you get long. I think instead of buying here, selling your way into bonds is an option. I'm not doing it on TLT because there's just no premium there, but we'll talk about what we're doing. All right, quickly moving through. 6A, the Aussie dollar futures dropped on the day. Of course, the dollar having a pretty good up day. British pound dropped on the session. Canadian dollar, resilient, moved up a tad on the day. And then the euro dropped again on the day, getting closer to new lows. However, we'll see what happens when we get back to this previous low. Are we getting any divergence in RSI, anything like that? Right now, the weekly, though, the overwhelming trend is down, and it's very slim, but you really are in somewhat of a, I guess it depends on where you want to draw this line. If we draw it up to here a little bit more, depending on how many points we can try to get in here. This is not really a wedge at all. This is just a channel, and we just remain in this tight drop channel. If we break the channel to the upside, I think that's our opportunity on the euro. Not looking too good right now. Let's take a look at oil. So oil on the session, massive up day, sanctions being reinforced on Russia. You can sanction Russia all you want. They're going to cheat. They're going to ship it. People are going to buy their cheating oil shipments. Okay. They've been doing that. You can't stop them. You're trying. You can put all the sanctions you want on. Oil's leaking out of Russia a little at a time, and because of that, sanctions don't mean a whole lot. But it's a big headline news, plus what you got going on in the Middle East. Even though Israel's not a hotbed of oil, Iran could pose some problems if this thing spills over beyond the borders and other countries start to get involved here. Now you got Hezbollah starting to talk about maybe joining the fray with Hamas. So now two terror organizations targeting the state of Israel. Does that bring in more countries to this particular fray? And it may not be from a military standpoint. It may be from oil or other types of exports. You know that obviously Syria, looks like Turkey, others not really on the side of Israel or the U.S. here. So it's a lot of the Arab states really could cause some oil problems, which is what I would think would keep oil somewhat elevated. I've been bearish on oil for several weeks now as we've moved lower because that's what we're seeing. However, the overall trend in oil continues to be really up, even though the last couple of weeks have been down. MACD has been falling. RSI has been falling. So I've been a bit bearish on oil, and it's really paid off pretty well on some of the trades we've made. However, you're starting with the advent of this war, the onset of this war, and you've got oil starting to move its way higher. You are still in this overall uptrend. In fact, this is really more of a channel, and I know you don't really not supposed to draw channels backwards necessarily. Let's see if we can draw this correctly and hit as many points as possible. I don't really know that this makes sense. I think we'll leave it around there somewhere. But you've got this uptrending channel. Let's make sure we get some of these points here. So you've got this uptrending channel here on oil. You've been to the low. You didn't quite get to the highs, but it has been trending higher overall on the weekly. Bearish the last several weeks, which is why I've been a bit bearish on it. Anything here, still a bounce, but you're overall in this uptrend. I think you see oil going higher potentially now. So I'm a little bit more on the bullish side of oil, not just because of a one-day move on Friday here, but I think you came down. You hit some lows in here. This was a little bit of a higher low. RSI is rising. MACD is rising. So the daily is moving higher. And even though the weekly, the momentum's been coming out, you didn't crack the 50 and you started to reverse on the week last week. So if we get some follow through this week, I think you can see MACD start to reverse here. But right now we're still remaining in this channel. So I'm going to extend this out a bit more here so that we can watch oil in this channel. I like it here. We've been selling naked puts in oil. We've got multiple trades on right now. So we've got naked puts. We got one up 24% in 5 days. We've got another naked put up 16% in 2 days. So oil looking good. The one thing on oil is the move was decent, but really look at the scheme of things. This big drop, a week ago, and then this week, somewhat of a rebound, half of the candle from the previous week. So it's really not, and it all really came in on Friday. But of this previous week's drop, you only recovered partial of that. But you are about to trigger also a PSAR bullish signal here. But what's bigger than this is actually the volatility on oil. And if we look at the OVX, which is the oil volatility, look at this thing running. Okay, oil volatility has doubled. Okay, doubled in the last 4 weeks or so. So from a low down here on roughly 9/11, okay, of 24 to almost 44. So almost a double in the volatility of oil. And Gary Crosby, a great trader in our Discord, brought this point up. I love this quote, and it's probably one of my favorite things I've heard in a while. Volatility will mean revert, but prices don't have to. So if your prices are going the wrong direction, that's one thing. But if volatility is spiking, and now your volatility here on oil, when's the last time it got outside of the 3 ATR? Well, you got to go back a long way, but it's not. Let's see if we can go back maybe a year. Only here, which is in March. Now, March is when Volmageddon happened, and that's where we took some hits on gold and a couple other things on strangles because volatility went crazy. Okay, volatility went crazy back here and got outside the 3 ATR for maybe 3 to 4 days, and then it reverted all the way back in fairly quickly. So that's March. If we take a look at it here, this is what we saw back in March on that. It ran up, and then 2 weeks later, it was right back to the 21 EMA. All right, so you get away from this 21, but then you will come right back to it. Then you'll go down to the downside, come right back to it. Volatility will mean revert back to the moving average, okay? But prices don't have to. Prices can continue to climb. Prices don't necessarily mean revert. Volatility will mean revert, which is the whole basis of selling options, okay? I hope this is making sense for you guys, but look what happened back here in March where we took some heat on some strangles. We did not get closed out on oil. We did on gold, which we're going to look at. Okay, but now we're back above the 3 ATR. Okay, another Volmageddon type of scenario where volatility has just ramped its way up. It was low, okay, outside the Bollinger Bands here, and then ran right up outside the Bollinger Bands again, based upon the fact that it stayed there for 2-3 days. You could even consider a week or so before it fell all the way back in. Volatility will mean revert. Okay. Volatility here on oil is absolutely in overbought territory. Volatility is at a high. Now, we have seen higher highs on this, so we've seen it go as high as 54 on the OVX here as well. But our IVR right now on oil is sitting somewhere around 66 IVR. Perfect spot to start selling strangles, selling premium on what you're doing. Now, with it moving up, you could be selling puts, you could be selling put credit spreads, you could potentially be selling strangles, 1-1-2 trades. It's a great time to take advantage of this because this is outside of a move on volatility that you typically get. Even though it's been moving higher, I expect it to mean revert back down into the mid-30s and then potentially even drop a little lower. So if you think volatility is going to mean revert in the next week or so, take that into consideration on your strangles or any trades that might start to be getting hoppy and pushing on the call side. So, all right, I hope that makes sense on oil. Let's look at gold. I'm going to do the same type of a scenario here on gold. I know this is taking longer, so a longer session today, only because I really want to get a good review in for the weekend of what's going on. Look at what gold did on Friday. So yeah, here. So gold on the 13th here massive move up. I mean, just is absolutely a massive move up. Gold finally just woke up. It was so oversold back here on 10.5. Okay, so oversold. I mean, this is as far oversold as I've seen it in, a long time. If we go back even, this is a 1-year chart, and we don't normally track a year, but going back a year, it was never that oversold. So we're sitting here. I'm going to go back to the original weekly, daily type charts, which I normally looking at a 6-month time frame. I just changed it to 6 month, but there's nothing oversold on gold like that. But you're in this. I'm sorry. I got to get back to gold. So gold continues to also sit in a pretty solid downtrend. I don't know the best place to draw this, but let's take a look. We can clean it up a little here on the daily. So from the highs here, touched it, pretty close to touching it, maybe a little bit over, and then back to it. So all you've done on gold so far is just come back to this downtrend channel. Doesn't mean we don't break it, and it doesn't mean we can't go higher. But this is a pretty much a standard type of channel. It's really not a wedge pattern at all, like many of the other things that we've seen. But if you're looking at this channel, you're at the top of it. The key here is, do you break it significantly, or do we just roll back down and continue this downtrend move? On the weekly, you're in a downtrend on gold. Okay. One day made an entire week. I mean, this was already moving up a bit on the week, and then one day really made this week massive. You broke above the 21, which is still below the 50 anyway, which is still below the 200. So there's a lot of overhead gravity still pulling gold down. But gold ran higher, which was actually not too bad for our trades. It was fine to price correct our gold strangles, which were getting a little heat on the put side on this big move down the previous 2 weeks. Now we snapped back. You would think that would be perfect for our gold trades, but here's gold volatility. So let's take a look at gold volatility now. And gold volatility now spiked. This is the second time this has happened. But gold volatility spiked significantly outside the 3 ATR, the Bollinger Band, on this move. So gold volatility now at a volatility we haven't seen since back in May. And I'm going to go back just a tad farther. So let's look at March, where we had Volmageddon again. This is where we got smoked a bit on some strangles. We took 3 strangle losses in one day. All 3 of our strangles lost in one day because the massive move, okay, here after we had dropped down here, it moved from 17, okay, all the way up to like 24. That's a big move in volatility in gold. So this gold volatility spike here, coupled with the selling in gold, I mean, it was a double whammy. Well, the same type of thing is now happening here on gold, where we're rising and we've got another spike in volatility. So you're rising, and volatility has gone essentially from back here on about 918 at 10 all the way up to 19. Its volatility has doubled in gold. It's been rising, and then just a massive spike on Friday. But this spike this time on gold was on a rise in gold versus back in March. Go back here again. If we look at March, we had a drop in gold. Okay, back here we had risen up. Well, it rose here and then had dropped back off. But both of these spikes here are coupled with massive increases in volatility, which is going to cause a lot of pain. So our gold strangles are in good shape. I mean, I've got one that's I got one that's down 32% and one that's down 80% on the move. They should be in great shape, because if we look at the actual strangles themselves and we look at the analysis tab, you're almost sitting in the dead middle on these particular trades. And I want to pull one up and just show you how that looks. So I know it's a long session today. bear with me. We'll get to some more stuff in just a minute. But let's take a look at some gold strangles. And we can see how they look. Let me switch screens for you here. Okay, so here's the first one. Let's change screens. All right. Look where this is sitting. Okay, it's sitting right in the middle of this trade. So this is the first of these gold strangles here. This is the 1790-2190 strangle. While this strangle is down 80% on the day, it's almost dead in the middle. So you're not even coming close to testing strikes, but you're down. You're down because Volmageddon II, part 2, is happening here. Big move on the day, which corrected us from down here. Fantastic. Okay, I'm happy that gold ran up 62 points in a day to close around 1945 or so. That's a big move. Okay, 60 points. Okay, 60 points from here was right around here. So it moved up significantly. Let's look at one of the other trades that we have in gold. And let's look at maybe, what is this one? The 1822.75. Okay, this is the other trade. Get this one centered. This one, even though gold ran up, this one's still on the downside. Okay, so this one wasn't affected quite as much. It's only down a fraction in here. But you can see that we haven't even gotten to the middle, but we're really not testing the upper part. And we lost money on this trade moving higher yesterday. Overall, this is after our session, shows us up a little bit. So those are some things to take a look at. And then obviously with Volmageddon part 2, I couldn't help myself but put a gold strangle on with all of this volatility. So I jumped into that trade yesterday. So there's where we are. Anyway, so there's gold. Really nothing big here. You're in this channel. Maybe it breaks out. Maybe gold starts to move to the upside. Maybe it is a safety trade now. Finally, it's waking up. We'll see what happens on gold. All right, let's just jump in. I won't get too deep into the sectors because I know we're going to run long on this session today. Big moves, XLE on the day, moving higher on the session. RSI breaking above 50. The MACD has been reversing. XLE energy strong, especially on the oil move. XOP, as you'd expect, your oil and gas ETF moving higher. This one's doing fantastic. Been a great move. Then you've got biotech, smaller move, but still up 1%. And then you've got utilities up 1%. That's pretty much where it ends. Yes, XLP, which consumer staples, XLV, some healthcare on UNH, I think. XLF, almost flat to slightly up. Financials, not really doing a whole lot of anything. And then at the bottom of the barrel here, semiconductors getting roasted. So we talked about breaking through potentially of this falling wedge, which it did. Did we get any follow through? No, back in. So now pretty much invalidated any kind of a breakthrough here. Potentially, we'll see. It's got to get back outside of that wedge. If not, it's just a falling wedge, and we continue to trade in here until we get a break one direction or another. Regional banks down 2%, breaking through its wedge as well. So we'll keep an eye on it. And then you had XLY, which is your consumer discretionary, XOK, your tech, and XLC. These are mainly your Magnificent Seven type of stocks, still hanging in there, down days, but nothing terrible. And then on the session, if we really look at some of the bigger changes on the day, Square getting wrecked out there at lows here. I still think it's something to keep an eye on. Very oversold, starting to break out here. Looked good for potentially a put credit spread, and then boom, back down. Here, Norwegian Cruise Lines having a terrible day. falling to new lows, new recent lows, I should say, not new all-time lows, but new recent lows here on Norwegian. AMD took a pretty good hit, but we're still in it on a put credit spread, breaking out. We had the confirmation. We stayed in it. We're still above the 21 EMA. Not looking great on the daily, the weekly, breaking out of this pennant to the upside. MACD was still moving higher. We couldn't trigger the PSAR buy signal, but I still like it here. We're still doing okay on this particular trade. It's still well above our strikes. Volatility impacting. Boeing, it's just a terrible stock. This thing is just struggling. It's been in this down, man, look at this down move from 244 to 184. I mean, Boeing just getting destroyed on some problems with Air Max parts, hitting some lows here. Now, this low, again, not all-time lows, but you're almost to a low here on a higher RSI, something to keep an eye on. You were starting to curl. You were starting to move higher. You get a PSAR bearish reversal. I'm not saying get long on Boeing at all here, something to keep an eye on. SoFi down 3% yesterday, but it's already breaking out of that triangle. You got NVIDIA down 3%. Plus, yes, on Friday here as well, moving down 21, 30, 50 EMAs are still above that. But the weekly does not look too good. So we'll see what happens. Really mixed. You're in this sideways range. A good strangle opportunity. I think you could strangle NVIDIA in here. And then Tesla down 3% as well, breaking the 21 and 50 EMAs, breaking the 50 on RSI, tipping over MACD, down on the weekly. You're in this triangle, couldn't break to the upside. If we break to the downside here, which I think is possible if this momentum continues, a lot of downward momentum, in my opinion, in Tesla here, weekly and daily. You're in a triangle, so the symmetrical triangle, it's going to break one way or the other. Let's see what happens. It could reverse. Markets could move higher and break to the upside. We could break to the downside, just nothing to do yet on Tesla. Let's see what happened in the account itself yesterday. We'll just briefly here, since we're long on the session, on the day. We ended the day with Delta sitting around 286, pretty good, like where we are on Delta, 0.1%, half of where we view our threshold, so we're totally fine on the Delta neutral sign. Theta, 835. Well, Volmageddon part 2 here is kicking in, and your theta is going up. So as you can see what's happened to our theta as volatility has continued to rise. Okay. So as volatility has been rising, again, from about 911-ish or so, but really you've seen volatility rising pretty good since the middle to end of September. Well, look at where our theta numbers were. They were sitting in the 30s all the way. In fact, we were in the 20, 0.2, 0.2. We couldn't even get out of 0.2, 0.3. Okay, then look what started to happen to theta right around here on the 15th, which is pretty close to a low on the VIX or the VVIX, either one that you want to look at. But if you look at the VIX, 915 was the low on the VIX where we hit 1282. Okay. Then ever since then, we have just gone higher and higher and higher and higher on our theta. So our theta cranking up. This is as high a theta as it's actually too high. So I've got too much theta, which is giving me a little bit of risk, but it's fine with the negative beta that I have. Portfolio took a pretty good hit on the volatility spike that raised the prices of all of the puts and calls that we have, mostly all naked puts. So that raised the volatility. So net lick dropped. But our BP usage did drop as well. So BP dropped on the session, like where our BP is, a little high, but in this Volmageddon scenario, this is not bad BP. And we managed to pick up $225 on the session, making it a $3,123 week. So we've made $3,100 on the week in realized. Netlick took a hit. Theta is cranking. This is the highest theta reading that we've had that I can remember getting to, and we didn't do anything. We've added a couple trades, but it's Volmageddon happening in there. And what were our two trades on the session? So the first trade was we put on a 0 DTE call spread. We took that one off for a 75% win, or $150 there. I did have a put fly on. We ran through the middle of the fly, so I closed it. It was just a small trade anyway, just to kind of demonstrate it. 0 DTE fly. It was a 93% winner, but we only made $75. But either way, we'll take the couple buck gain, $225 on. So 5 days of winning trades for the week. So 5 straight winners, despite what the markets are doing, up $3,000 on the week, and we still have 1-1-2 trades and some strangles potentially to come off this month. So I'm excited about where we're heading for the month as the market kind of oscillates back and forth. So there's the review for trading day. I hope you guys have a great weekend. Volmageddon. If you're a seller, it's time to take advantage of that volatility. You've got to be selling here, using this volatility to your advantage. It will mean revert, okay, which will absolutely help all of your positions here. And just be aware of where your positions are strike-wise, because you may be losing on both the put and the call side on a strangle. It's because of volatility, Volmageddon part 2, okay? But you may not be in trouble on the strikes at all. So it might be a case where I'm not telling you to break your rules, but I'm certainly going to take a look at that before I close something at a 2x loss here, even though that's my trade plan. If my strikes are starting to get, if I'm leaning to one strike or the other, but if I'm dead center, I'm probably going to try to let this volatility calm down a bit if it doesn't automatically do that on Monday or Tuesday. But we're not in a position where we're closing yet. All right, you guys take care. Have a great weekend. We'll have some videos out over the weekend. Take care, everybody. Enjoy a great rest of your day and weekend.